Good afternoon traders, it's about 1:30 in the afternoon UK time, Friday the 18th of May 2018. It's about halfway through the daily trading session here on Friday, and I'm looking here at New Zealand dollar to US dollar. Now, I wanted to talk about a comment that was left on our market selection service, which by the way is free to join. If you haven't joined already, the link's in the description box. It was a comment from someone called Adam today pointing out that earlier in the week I was talking about New Zealand dollar to US dollar, and I was saying that potentially it could close the week as a type 2 close on the weekly chart. And so I just wanted to elaborate on this comment a bit. You can see the comment for yourself if you go into the platform, have a look, see what he said in full. But I just wanted to elaborate on this and also point out why this bit of information is very important for our trading. So it all comes from the point that significant levels attract the price as well as reversing the price, as well as repelling the price away from them. Now, when we're looking at our double confirmations all the time, if you're learning the Duomo method, then it seems a lot of people get sidetracked by always thinking about the price being reversed from the significant levels. But that means that you're kind of like restricting your trading, you're restricting the way you're looking at your markets, because you also need to keep in mind that the price can be attracted to a level. And this is what basically happened in this situation. So on this day, I believe that was the start of the week, probably like Monday or something was that. So Friday, Thursday, Wednesday, Tuesday, Monday. Yeah, Monday. See how I have to count the candles back, embarrassing. On Monday, I pointed out in our market selection that this may be a good opportunity in New Zealand dollar to US dollar if we start approaching this baseline trend line that we had here, because it was a very strong one. Let me just zoom out so you can see that properly. The anchor point, the first anchor point is way down here. I won't go back there to show you, but basically we were approaching it and I was saying there's a few different scenarios of what can happen. Either we close the type 1 or type 2 close, which would be very good for us, or potentially we get the intraday bounce off there like we did at this point here. So obviously there's a bounce when it reaches a significant level. Also failing at a significant level leads to quite a big nice move up there. And so the same sort of thing could have happened. Now, obviously, as you can see on your screen, what did end up happening was that we closed the day with a lot of bearish momentum. It closed at the lows for the day. You can see there's no wick at the bottom. And in that situation, when we look at the triad of price action, we're saying that, okay, that's a lot of bearish momentum. Perhaps you want to stay out of the market the next day. However, the next day, because we were right at this sort of weekly baseline trend line at that point in time, and obviously with the hierarchy of time frames, we sort of favor the higher time frames, and that was what was happening in this case. We said it could be still an opportunity if bullish structure turns in our favor. So you can see it did start off that way, led up to the baseline trend line from the other side, and obviously significant levels have no directional bias. So it approached it from the other side, failed, this level acted as resistance, and the price moved all the way down to here. Now, based on the daily chart, you'd say that probably this is kind of a lost opportunity now, like there's a lost cause. There's not going to be another opportunity there for anything long. You're probably looking bearish at that point in time. However, we have to keep in mind the weekly chart, and we have to remember that significant levels attract the price as well as repelling the price. So at this point in time, I was saying about this reversal zone down here, potentially we could reach that, we didn't. But also that the weekly chart may attract the price. And especially on with any time frame that you're looking at, towards the last portion of that time frame, let's say the last 10-20% of that time frame is when it's more important to keep in mind that the price may want to close as a type 2. So if the price is near that significant level towards the close of that candle, it's likely to be wanting to be attracted to that level to close the type 2 or just to interact with it. Like for example, if it's down here by the baseline, sometimes it'll just flick down and touch it and close to type 1 or something instead. So now that it's Friday, if we're looking at the weekly chart, then obviously we're in that last 20%. And when we started the day just below, as you can see, this is the daily chart again, we started just down here. So let me just put this in so we can see, and we'll make sure that that's also appearing on the weekly chart so we can see exactly where that was. Yeah, showing all time frames. So you can see we're just below that level. This is why I wasn't following this. I didn't think there were enough pips between there and the baseline to really go for it. I'd rather look at the FTSE 100 and US dollar Swiss francs today. But basically, even if it does approach this baseline, if there's enough hours left in the day like there was this time when it did it, maybe it's going to use that momentum to go further, because obviously in order for it to go up there, potentially it's creating higher highs and higher lows and building that bullish structure on a different time frame, which it was. You can see on the hourly, higher high, higher low, and then potentially we're going to push up and create another higher high. Let's wait and see. But because of that, it's creating momentum, which means that it could push further and therefore close the week as a type 3 close. Or if it does close to type 2, and if you're the type of trader that's willing to stay in over the weekend, which in most cases I'm not, Then the next week you'd expect, because this is the baseline and that's the outline of the market, it's going to take a lot of momentum to close through it. Then it might keep going and next week will be bullish, and therefore something that starts out as a small trade, which might have been like 20 pips, turns into something that's much, much bigger. But obviously in all of these cases, you've got to be very careful because there's a lot of bearish momentum that's happened there. Yes, it's been running out over the last few weeks and starting to be a little bit more staggered, but you still got to be aware of it. But anyway, what I wanted to point out in this video, and I hope the message you got, is that you have to keep in mind that the price can be attracted to the significant levels as well. And in some cases, you may actually be able to use that as part of your double confirmation. They don't both need to be closed as type 1 or type 2s to be repelled from the price, from the significant level. It can also be that it's going to be attracted to a level. And this is something that I was actually talking about on the phone with someone earlier this week who's learning to trade. And I was trying to say to them, look, you could be more flexible with your entries if you start remembering that the price is going to be attracted to certain levels, especially if they're major levels. So something to keep in mind, keep an eye on this New Zealand dollar to US dollar. If you like this video, please hit the thumbs up and don't forget to subscribe, and make sure you switch on notifications for that little bell so you don't miss out on getting these straight away when they come out, in case it's something that's really timely for the market. But anyway guys, appreciate you watching, take care, and I'll see you in the next one.